Hey guys, welcome to my channel. My name is Xuan Kai and I'm a day trader from Singapore. 2020 has been a hard year for all of us, so let's look back, reflect and improve on our mistakes so that we can make 2021 an awesome year. Let's start the video. So in this video, we're going to discuss the top 5 beginner day trading mistakes that I used to make when I first started day trading. Whether you are a struggling day trader or someone who just has interest in day trading and you think that you wanted to give it a try, this video is really going to save some of your money and hopefully some of your time. Even if it doesn't save your money and it saves your time, by default, time equals money, so I saved your money anyway. So let's get into the video. So the number one biggest trading mistake that I started out was expectation. I had poor expectations of day trading. So the common myth with trading is that it's a get-rich-quick scheme. It's easy to trade, you can retire early and you can quit your job. So the truth is actually it's extremely difficult. It's extremely time consuming as well. Most traders that I know can take a few months to maybe a few years to really grasp the concept to become consistently profitable. So can you take having maybe 1 to 2 years of not earning any money and losing money all the way throughout this time in order to become a consistently profitable trader? I'm sure you started trading for one reason and one reason only, right? Very simple reason, which is to earn money. But then you're going to spend 1 to 2 years not earning any money but instead losing money all the way until things finally click and then you can start making money in that 2-year or maybe the 3rd year mark. Can you stay that long? If you quit during these 1 or 2 years, that means that all the money that you have spent, all the time and effort you put in, everything is gone down the drain just because you tried to do day trading. So it might seem ironic that I'm a day trader and I'm trying to discourage you from doing day trading. I am interested and passionate in this field, so I've decided to stick to it and try it out. So I still don't know whether I can become consistently profitable. I've seen a little bit of result, but I'm not sure that it is what you are looking for. Even I got suckered in and I thought I could get rich quick and quit my job. I mean, I did quit my job, but I didn't get rich. In fact, I chose one of the slowest ways to get rich. But it's the same as any other business that you start. You're going to have to maybe take a couple of months to years to build up the business in order to make it profitable. So there's also that degree of unpredictability and uncertainty that you have to manage during your trading career. You don't actually have a fixed salary per se or fixed earning every month, every week, every day. It's totally different. I could earn 500 this week, I could earn 1,000 next week, I could lose 2,000 the week after that, and then maybe overall in a whole month, maybe I lose $3,000. Are you okay with that? Compared to a conventional job, you will get paid at the end of the day or the end of the month. That is what people are looking for, that kind of stability that they want. They get paid every month so that they can continue their lives peacefully. But if you enter trading, you're going to have a lot of these moments where you're thinking, can I survive for this month? Do I have enough for this month? How much will I earn this month or this week? So the reality is going to take a lot of time. It's going to take a lot of effort. It's going to be difficult. And there's a lot of uncertainty and unpredictability. So the second biggest trading mistake is that I had no trading plans going into trading. But what did I have? I had the shiny object syndrome. So it means that whatever stock that's hot for the day, whatever stock that's rising rapidly, I want to trade it. But how do I trade it? I have no freaking idea. All I know is that when I first started, all I wanted to do was that I'm just going to buy, I'm just going to hope it rises, and then when it hits maybe about 10-20% of profit, then I'm going to sell. Then that's all. So where I'm going to buy is whenever I feel like buying, and when I'm going to sell is when I feel like I've earned enough. Firstly, I'm just buying based on emotions. Secondly, I'm selling based on emotions as well. And thirdly, I don't have a concrete exit plan if things go south. Meaning that if I buy, the stock plunges, the stock drops, where do I sell? I also don't know. I just sell when you cannot bear the emotional pain anymore, and then you just sell it because the loss is too big for you to handle, and then you just sell it away. So if you have no trading plan going in, there's 2 things that are likely to happen. One is that you have very small wins, and number 2, you have very big losses. So the reason why you have small wins is that once it moves in your direction and it starts to move up, and then it suddenly starts to slow down and pull back a little bit, you will feel a little bit scared, and then you will quickly sell it away because you're already in profit. So every one of your wins is going to be really, really small. You're not going to be able to hold it all the way to maybe, let's say you want to earn 10%, 20%, whatever you're trading at that time. You won't be able to hold through it because you have no trading plan. And secondly, you're going to have very, very big losses because you don't know where you're going to exit. So you probably will hold on to it, hoping that it's going to reverse somewhere along the line. So it's going to drop until very, very low, until the point where you cannot take it anymore. So that point that you cannot take it anymore, there's no saying how low that is. It really depends on your risk tolerance. So you will have big losses plus small wins equals very big losses anyway. Yeah, so you came into trading to earn money, so why do you want to lose so much money? If you are serious about trading, you're going to need a trading plan. So your trading plan must have your entry, your stop loss, and your exit, your target price. So you must also know whether you're going long or you're going short, what you're trading and why you're trading. All your trading decisions must be governed by just the chart alone. Where you enter, why you enter, must be because of the chart. You cannot make any trading decisions based on just your feelings. I feel that it's going to go up. I feel that it's going to go down now. That's not how it works. Your feeling is definitely wrong. Every one of your trades should be made based on the technicals of the chart instead of your feelings. There is no room for your feelings in this market at all. You cannot, I think it's going to go up. Yeah, I think it's going to go up, or I think it's going to go down. Okay, let's just try. Without a trading plan, you rush into it, you're definitely going to lose money in the long term. So the next day trading mistake that people do all the time is that they forget to smash the like button. Caught you, didn't I? Definitely, right? Or maybe you expected it. I don't know. Yeah. So I'm just joking, but really smashing the like button will really help me out quite a bit. It really helps to get the YouTube algorithm going and helps to promote my YouTube videos to more people, so more people can watch this video. Trading mistake number 3. Jumping from strategy to strategy. So if you were to comb YouTube or any of the trading courses out there, you would see that actually there are million strategies out there. There's tons and tons of strategies, and what do they all say? All the strategies have a like 75% maybe to 100% kind of success rate. It's going to work all the time, or it's going to work majority of the time. All these things are nonsense. They cannot be trusted. What I spent so long in my trading career was that I was trying to find the holy grail of trading, which is the perfect strategy that's going to work all the time and it's going to make me rich and a millionaire. So how this works is that people analyze the charts from the past, and then based on the past market data, they already have the information. They can just devise a strategy that buys low and sells high. You always see that, right? Buy low, sell high. But then it doesn't work all the time. Why? The way the market works is that everybody comes into the market at this particular point of time. They have transactions going on. That's why it causes the market to go up or the market to go down, depending on whether there's more aggressive buying or whether there's more aggressive selling. So in order for the markets to perfectly replicate themselves in the future, it means the same people have to do the same thing at the same time and participate in the market at that point of time in order to make sure that the movement is the same. How can that be? It's totally different, right? The trader that traded on Monday is going to be different from the trader that traded on Friday. The timing that they trade, what they trade, how many shares they trade, there's so many factors. The market is constantly evolving and constantly changing because the interactions and the transactions between the traders are different. So how can a tool from the past predict the future with 100% certainty? It can't be that way. It definitely won't be as accurate as possible. So stop searching for the perfect strategy and just go for a strategy that's simple and easy to follow. Usually what people think is that, oh, the stock market is very difficult to trade. A lot of people lose money. 90% of traders lose money. So I need a complicated and a very sophisticated strategy in order to beat everyone else and earn money. But that is not the truth. Just follow and stick to a simple strategy. Test it out. See how well it works. If it works, stick to it and continue. If it doesn't, throw it out. Try a new strategy. The most important thing is you need to test each strategy out thoroughly in order to make sure whether it works or not. The fourth biggest trading mistake that I made when I was a beginner was that I was trying to master the indicators. I was trying to look at indicators everywhere in order to make sure that I devised the perfect strategy. This kind of links into number 3 of finding the perfect strategy. Usually people focus on the indicators, which is the wrong thing to focus on in trading. So if you have heard of indicators, you know things like RSI, MACD, EMAs, SMAs. What else is there? There's actually a ton of indicators out there. Bollinger Bands, Ichimoku Clouds. There's a lot of indicators out there. There's a lot of fanciful names. And honestly speaking, most of them are trash. What you really need is price action. So price action is king. So meaning learning how to read candlesticks and learning the charts. Uptrend, downtrend, pullbacks, retracements, all these things are your fundamentals. You need to know what the price action is showing you in order to trade well. The indicators do not work 100% of the time, much like the trading strategy. So if you look at the RSI, for example, there's 2 important values on the RSI. There's 70 and 30. So when it hits RSI 70, what it means is that a lot of people are buying, so now the stock is overbought. So what happens is that people usually short the market when RSI is above 70. It's an indicator that shows that it's time to short the market. Is a reversal happening here. When it hits 30, it means that it is oversold. So what happens is that the stock is dropping too fast. When it hits that level, the indicator is trying to tell you, you can buy here, so that it is time for reversal, it's going to go up from here on. But no matter what I do, if I ignore price action and I just blindly listen to the indicators and I follow the indicators, when it's below 30, I buy. When it's above 70, I short. It doesn't work. I always lose money. The indicators are not the main thing that you have to learn. The main thing that you have to learn is price action. If you learn how to read charts properly and simply, back to simplicity again, uptrend, downtrend, sideways trend. These are actually just the 3 things you need to know. The candlesticks wise, you can go and learn about it more, but basically you must know your fundamentals properly, and indicators are not the way to go. However, your indicators can be used as a secondary confirmation. So meaning price action is telling you something. So maybe the stock is going down, it hits this support, and then at this support, which is shown by the price level, and then you try to confirm it with the indicator. Oh, okay, RSI is low here. It is likely to reverse. Likely, there's a higher probability of it reversing, but not 100% probability of it increasing. So basically using indicators as an add-on to your trading if you have mastered price action. If you have not mastered price action, then just go back to price action. Totally ignore indicators. So the 5th biggest mistake that I made as a day trader was that I wasn't journaling. This is one of the most important things that actually helped me to become a little bit more profitable, a little bit more consistent with myself and my trading in these 3 to 4 months that I've been trading. Journaling has been a really big one. I can assure you that if you start journaling properly, not just journaling for the sake of journaling, but if you journal properly, you can actually save yourself months or even years of time and frustration trying to figure out what is wrong with your trading. So I think that journaling is actually one of the true secrets to learning how to trade properly. And why do I think so? Have you ever heard this phrase, what gets measured gets accomplished? So what this means is that whatever that you journal down, you can reflect, you can improve, and you know exactly what's going on, and you have a level of measure for your trading. If you really just enter whenever you feel like entering, you have no trading plan, and you don't reflect back on it, you don't think about it at all, how are you even going to improve? Same as everything in life, you definitely need to reflect on your past experiences, learn from your mistakes, and then improve. This is the same in trading. It helps you with emotional control and emotional awareness. So I mentioned this before in my previous video. You can check it out here in the video that I had where I took the trade on Tesla, where emotions were going everywhere, and you can only revisit these emotions when you journal down. So you need to know exactly what kind of person you are, how you are feeling at that point of time, and how you react in different situations. So all these things only happen when you start journaling. So what are the usual mistakes that traders usually do? They FOMO, they're scared to lose money, they are not willing to take their profits, they are not willing to cut their losses. So all these mistakes that I mentioned, what do they usually happen because of? Your feelings, your emotions. Because you cannot control your emotions at that point of time, you're not aware of it, and that's why you cannot control it. So by journaling, you can know exactly what you're feeling at that point of time and how you react in that certain situation. So then you can devise strategies and solutions in order to help yourself to overcome that. So a personal experience for myself is that I am someone who is susceptible to FOMO, especially after I miss a trade that I'm watching. Then the next trade that I take will be slightly irrational. I have realized this only through journaling and not through trading. Journaling is the way you can realize such things. So when I realized that from my journaling, what I did for myself is that whenever I miss a trade, okay, I'll take a few minutes, I'll step away from the trading desk, I'll do some breathing exercises to calm myself down so that my emotions are not sky high and I don't feel emotionally charged and it hijacks my trading. So that is just one example of how journaling helped me in my trading, and hopefully journaling can help you unlock the secret to trading as well. So hopefully these 5 beginner trader mistakes that I've been making since my entire trading career, and I'm still making them now, can help you to become a better trader, or at least help you to avoid losing so much money in the future. So even if you take away nothing from this video and everything was just entertainment for you, I want you to remember the most important thing, which is journaling. It can help you in your life, in trading or whatever. Journaling is the most important thing for trading wise. So if you have stayed with me all the way to the end of this video, thank you so much for watching. So if you've enjoyed this video, don't forget to hit the like button, hit the subscribe button, and hit the notification bell. And don't forget to add me on Instagram as well. I pretty much post there daily whenever I'm trading, and I'll see you guys in the next video. Peace out.